it could be an indicator of a slowdown in the global economy. Now, why is it important to us, silver investors, particularly silver investors?
Hello and welcome, everyone. It's an honor to have Oren Elbaz back on the show today. His YouTube channel is the Silver Hermit, and he has some highly informative videos that I recommend you check out. Oren, welcome back. I appreciate you joining me today.
Hello, it's fun being back.
Well, it's an honor to have you here with me. And I wanted to start out by talking about one of your recent videos that I enjoyed. This video is called Gold and Silver Enemies of the State. I thought the part about the telegram from 1974 was interesting. It basically
Yes.
said that they were expecting the physical silver market to be minuscule compared to the futures market. Something I learned from that video is that right now, the eighth largest traders are short over 140 days of the global production of silver. How are they able to use this, a large short position, to keep the price of silver down? And how could buying physical silver or engaging in the silver squeeze help to fix this?
Yes. So let's start by mentioning that telegram. It was a telegram which was sent from American diplomats in London who went to see large bullion dealers back in 1974 and discuss with them how to deal with the rising price of gold at the time. Because gold was about to become the trading of gold, the ownership of gold for private people, it was becoming legal again, beginning in 1975. And they were concerned that this would boost the price of gold. And of course, since Nixon dropped, the gold standard was suspended in 1971, then the rising price of gold was exposing the fact that the dollar was weakening. So,
Didn't want to make the dollar look bad.
yes, yes, definitely. So, they were just before gold was legalized again. They were trying to understand the ramifications of that, and the idea of setting up a gold futures exchange and trading future contracts in the U.S. Was raised, and it was said that it would inject volatility into the market, and that people would rather hold those future contracts instead of physical gold, and that holding, the holders of physical gold, it would be, minuscule compared to the trading on that exchange. And that this way, this will prevent the price of gold from rising too rapidly or rising too much, and they will be able to control it this way. So why is that telegram so important? Well, first of all, because it exposes the fact that the US government was concerned about the price of gold, of course, something which it denies formally, but
Right.
also that it's like the smoking gun, that there's actually proof that the US government was aware that trading on the commodity exchange would inject volatility and deter the average person from holding gold.
Absolutely. And I think it's really interesting that that came up because so they've known this since the very beginning, which I wasn't aware of before I watched that video.
I think that this was kind of a process. I think at the time they kind of knew that such a market would inject volatility into the price, and as time went on, I think they became more and more involved in that market in order to hold the price down. You have to consider that many years have gone by, and monetary policy in the US has become more and more extreme over those years. There was a time in which QE, money printing, was was considered completely radical. And in after 2008, they started using it supposedly as an extreme measure, an emergency measure. And later it became like standard activity of the Federal Reserve. Right now, we're not in the midst of QE, but it's pretty certain. It's pretty. We can assume that if we're going to have another financial crisis, then they're going to restart QE once more. So it has become like the routine, and as they use more and more radical monetary policy, they have to use more and more radical measures in order to contain the price of gold. And as we're seeing today, and we're going to discuss this, they haven't been able to do that. So the price of gold is breaking out.
Yeah, we're finally seeing it breaking out. It's great to see it over 2,300. And it's interesting, how effective controlling the price is with the paper markets. Now, I wanted to ask, now roughly, what would you say the price of silver would be if it was based only on trading that took place during COMEX hours?
Yes, so we have that famous chart that
Yes.
I didn't compile, by the way. That demonstrate what would happen if silver was traded only during COMEX hours,
Hmm.
compared to its theoretical price if it was traded only outside of COMEX hours, and the difference is extreme.
It's staggering. Yeah.
Yes, it's staggering.
I think that's what it said was 20 cents.
It was something ridiculous like that. And
Crazy.
on the other hand, if it was traded only outside of COMEX hours, it would reach something like $200 an ounce.
Yeah.
So never mind the numbers. The thing is that it is completely irrational that you'll have a market which is only trading down during certain hours and only trading up, or on average only trading up during other hours. It
Absolutely.
means it gives you an indication. Look, a normal market would not work this way.
No way.
You'd have buying and selling in certain times. For instance, now that the price is trending up, so why should Westerners only sell silver while in the East it's only being bought? It makes no sense. So the fact that you're seeing such discrepancy between West and East, it kind of it's a telltale that the market is rigged or has been rigged. Now, people are wondering, are we seeing the manipulation ending before our very eyes? Because, right now the price is breaking out. So does it mean that the manipulation is over? I'm afraid I'm not quite certain about that. And I think we're going to talk about that soon. I'm going to reveal my thoughts about that. But I just wanted to say, because you asked me earlier how the commodity exchange and futures contracts are being used in order to control the price. Well,
Hmm.
it can be done very easily, because a large short position in the commodity exchange, although it is not backed by physical metal, but it gives the appearance of an abundance of supply, right?
Right. This
When
like
when
mirage.
Yes, like traders, they they have a look at the market, at the commodity exchange, and what they see is this very an abundance of supply. Like there's plenty of people willing to sell you metal if the price goes high enough and just slightly above the current price, for instance. So it deters them from entering the market, because they 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 see that there's so much supply. So why should they speculate on silver when there's apparently so much supply? But we assume that these are naked shorts. In other words, they are not backed by physical metal. And
Right.
by tuning this short position up and down, for instance, if the price goes up, then you extend that position, you make it larger. And then the price falls, you can buy back those contracts at a lower price, pocket the difference, of course,
Right.
and then begin again,
Yep.
start again. And so
They
you can contain the price theoretically. The only problem with doing that is that it's illegal. That's the only problem, right?
right.
So if you're supposed to have a regulator to prevent such things from happening, because if a concentrated position, like trying to affect the price, is illegal, period. And having a short position, the only reason why you would have a concentrated short position, it's in order to control the price. So it's illegal by definition. Okay? And the fact that the regulator is doing nothing about it and has done nothing about it for ages and ages should tell you that pretty much
Something's up.
the regulator is looking away, and it's probably being done at the behest of the federal government, right?
Right.
It's simple logic. I mean, like, frankly, people who deny the fact that there is a manipulation in the precious metals market, I think it's laughable. Come on, it's so obvious by now. It should be so obvious by now that I find it to be laughable.
I do too. And I don't know if some of them maybe just haven't looked into it enough yet or whatever's going on, but there's definitely something going on. And yeah, I mean that video speaks volumes to that. Um
Thank you.
yeah, you bet. Absolutely. I think if people watch it and think about what you're saying, they'll realize the manipulation's clear. So that would be a good one to hopefully make people aware of what's going on if you guys wanted to check that one out. So I did want to go ahead and we'll talk about the price movements today. It's
Yes.
exciting to see gold and silver breaking out. I just checked the prices earlier before we hopped on. Gold was over 2,300 and silver was over 27. So what do you
As we
think?
were saying, that is both exciting and frightening.
Yes.
Because, on one hand, we as investors in the precious metals market, we want to see the price rise because we believe the price is too low and the price is artificially kept down. And we were expecting the price to rise, and we were trying to protect ourselves from inflation by holding physical gold and silver. And that's something completely legitimate. But as it's happening, we are also, especially that it's happening so quickly and suddenly, and the price movement is so extreme, there's something also frightening about it. Because you cannot help asking yourself whether this is not an indication of a looming financial crisis, that perhaps there's more than just, the effect of inflation there. Perhaps there's some kind of event getting closer, which the price of gold and silver is like foreshadowing.
Right,
Now,
absolutely. Because it is one of those things where because we're aware of the manipulation, it's exciting to see it break out because it's not at its true market value, at its like honest market value. And so we want to see it get to that point. Of course, we don't want to see, a lot of chaos in the economy. Um, and what you were saying about volatility, I mean, it is really crazy right now, folks. At 5 a.m. this morning, the silver price was as low as 26.21, and it went all the way up to 27.28 at 6:30 this evening. And I mean, that's, a little over $1 in one day. Like, what do you think about that kind of price
yes.
volatility?
I was being asked whether this means that the manipulation is finally over, whether the manipulation has been broken. And I'm not sure about that. We still don't have enough data in order to confirm such a thing. I personally believe that so long as the comics exists, there's going to be a manipulation of the price of gold and silver on the comics. The only way really to break the manipulation is when people are going to stop treating the official price of gold and silver coming from the comics as the price of gold and silver. The moment they disregard that price, they start treating it as just a worthless piece of data that nobody takes seriously, that's the moment when you know for sure that the manipulation is over. Now, it could be that we're in the process of that happening because, in the past few years, since the price was so low, it meant that it translated into a deficit, certainly in the silver market, and there was
Right.
the inventories, the above ground inventories were being drained. So are we at the point that the inventories are gone or close to gone to such an extent that the manipulation is breaking? I'm not sure about that yet. There is another possibility. The other possibility is that what we are seeing is what I call a managed retreat.
Okay.
In other words, because we all know that miners haven't been able to make a profit in recent years. The price was too low. On one hand, their expenses were growing. The cost of fuel, the cost of materials, the cost of salaries, their costs were rising, but the price of gold and silver wasn't rising. So they were being squeezed. And eventually we could see mining companies failing, going bankrupt. And then you would see mining supply fall off a cliff.
Oh yeah, get even worse. And it's already been in a deficit for years at this point.
Yes, and the market is already tight and has been tight for a few years, and you already have a deficit. Now imagine if, for instance, people say, oh, when it comes to silver, since a lot of the silver which is coming to the market is coming as a byproduct of the mining of base metals, copper, lead, and zinc.
Yep.
That's more than 50% of the market. And people are assuming that those miners will continue bringing silver to the market no matter the price. And perhaps there's truth to that.
Maybe a
Uh,
small amount.
yeah, I think they're going to produce, as long as there's demand for copper, lead, and zinc, they're going to go on producing the base metals, and silver is going to come as a byproduct. And
Right.
they're going to receive whatever price the market is willing to offer for that silver. But you have the primary silver miners who are responsible to about 25% of the global supply. And if the price is too low, then they will go bankrupt, or at least shut down their mines, put them on, maintenance, care and maintenance. And that means 25%, like something like 200 million ounces will just vanish overnight, and the market cannot tolerate that. So what I'm thinking is perhaps the manipulators, the people behind that manipulation, they are forced to allow the price to rise so as to allow the miners some kind of profit and allow them to go on operating.
That's a really good guess because clearly this situation is unsustainable.
Yes.
The demand for solar alone is going to put tremendous amounts of pressure on
Yes.
the supply. Um, that
Last time we spoke, we were talking about this exact topic, and we were saying that the people above, the people in charge,
Mhm.
miscalculated when they started this green revolution and allowed so much money to flow into the solar energy industry without really giving a thought to the availability of silver in order to produce those solar cells.
Right. Yeah. How are they going to make all these? Absolutely.
And right now, we are in a deficit, and perhaps they are forced to allow the price to rise in order to supply the market with that very much needed metal. And in that case, I wouldn't be surprised if the price, for instance, rises, let's say to 28 or $30 an ounce, and then they're going to start trying, they will try to defend that price. It's going to be like the new normal. for a while, for a while. Now, the question is whether they will succeed or not. And that depends on the public. Because if this bounce from 25 to 30, for instance, is going to generate a lot of investor demand for physical metal, not futures contracts, then perhaps they won't be able to defend $30. Also, perhaps they're going to have to, they have no choice but to fall back to, for them, it's back. For us, it's forward. You
Right.
see?
One thing that I noticed today was that the gold to silver ratio got down to like 84.5 to 1.
Yes.
And I'm hoping to see it keep lowering. Um,
You know,
and
I just tweeted a very interesting chart which shows the gold to silver ratio
uh-huh.
historically, like looking back all the way back to the 19th century and further back, and you can see that a gold to silver ratio of 80 or more is a very rare event. That throughout most of history, the gold to silver ratio was below 20, which makes sense because that is more or less the ratio between the abundance of the two metals in the ground, gold and silver.
Right. Yeah.
And
And the crust. And they're bringing it out of the crust at a ratio of about 7 to 1 right now, is what people are
yes,
saying.
yes, yes, definitely. And you can see that sometimes around the Industrial Revolution, no, exaggerating. I mean, in the end of the 19th century, when
Uh-huh.
industrial mining became more common, let's put it this way, and the use, the application of fossil fuels allowed miners to extract silver more efficiently. So you see the price of the gold to silver ratio. You see it starting to rise at first above 20 and then towards drifting towards the 40. But seeing it above 80 is still, historically speaking, a very rare event. So although, in recent years it has been over 80 and we've seen it at 90, during 2020 we've already seen it even at trading around 100. But we got used to it being this way. But we have to remember that historically speaking, this is a very rare event, and I don't expect that to last. Well, one reason is because we have the lack of energy. There's a problem with the price of oil, natural gas. I believe that in coming years, we're going to see the price of energy rising. So that means that even though we have this technological ability to extract silver more efficiently than let's say in the 19th century, still the price is going to have to rise accordingly. And it could turn out that this glut of silver that we've seen, during the 20th century, that was just it wasn't the new normal. It was just a passing event. And
Right.
and and also, of course, silver is a finite resource. Like, let's assume that you are able to extract silver very efficiently, but then that's it.
At some
You've
point, it's going to
extracted.
run out anyway. Yeah.
Yeah, it's gonna run out in the ground.
Yep.
So
Exactly.
so it could turn out that this apparent glut of silver that we've seen during the 20th century, it was just transient. It wasn't something we can build upon. You see what I mean?
Right,
And
absolutely. I mean, because you're pushing back the inevitable.
yes,
You've lowered the rate that you're extracting it from the crust, but it is finite. It's going to run out at some point, and so that's a really good point, and it's so useful too.
like
It's one of those things where I don't know where price discovery might go one of these years or decades, but I imagine it's going to be pretty crazy at some point. I saw that during Silver Squeeze, it had gotten down as low as 64 to 1 at one point. And that wasn't that long ago. And
yeah.
if we got back to something like that, 65 to 1, let's say if we got to 65 to 1, we'd be at about $35 per ounce. And that's with the COMEX up and operating and all that kind of stuff. And so I'm hoping to see us get up in that mid 30s range, especially if we start to get some investment demand piling in here. Um,
I
and
don't think it is beyond the realm of possibility that we're going to return to the historic ratio of less than 20 to 1. I think it makes perfect sense to me. Now, the thing is, I don't know how long it's going to take because the process that I just described of going from 20 to 80 or even 100, it took over 100 years. So I don't know how long it's going to take for us to come back down. But the thing is, I think people are nowadays are hyper focused on very short-term trends, and they should try to think of the big picture. Just suppose that we're going to see silver trending up, the price of silver trending up in coming years, and that eventually, let's say it's going to take another 20 years for us to see the gold to silver ratio going back to 1 to 20. Do
uh-huh.
Is it going to change anything for you personally? So you're not going to get rich out of silver right here and now, but you will be able, for instance, to use it as your retirement
Right.
savings, right? And it's going to appreciate as you go older. It's going to appreciate as you approach retirement. And perhaps we can't, of course, we can't guarantee anything. Uh, I'm not uh, I'm not a
Right.
licensed financial advisor, and nothing that I say is financial advice. But just looking at the data and using common sense, this is what I see, and this is my personal opinion.
No, and everything that you're saying is making sense. And yep, nothing in this video is financial advice. I mean, I think we could see the gold to silver ratio, going lower in the years to come. And this is with gold also rising in price at the same time, because it's doing its job. It's adjusting with inflation, and it's probably
Yes.
also getting some pressure relief from potential manipulation.
So I want to tell you something, your listeners. I want to tell them something. Look,
Uh-huh.
we in the West, we used to looking at the price of gold in dollars,
Yes.
right? But of course, in recent years, the dollar has been very strong compared to other currencies, compared to the euro, compared to the Japanese yen.
Good point.
So if you try and check out the price of gold in other currencies, for instance, the euro, you're going to see that it was continuously going up. As a matter of fact, it has been setting new highs for quite a while now. The fact that gold has broken out right now, just recently, that's in terms of dollars. And that's something which is specific to the dollar. Because, and why the most plausible explanation for that is because, um, the Fed has been raising rates. After inflation broke out, the Fed has been trying to fight it, not
Mhm.
very seriously, but has been trying to fight it, and rates have gone up tremendously. So there was a consensus that the dollar is going to get stronger. So in terms of dollars, gold wasn't very strong, right? But
Right.
now inflation is still relatively high, yes,
Oh yeah.
compared to
Like
historic
normal.
values. It's still relatively high, and it's probably trending higher. At the same time, we're being told by the Federal Reserve that they're not going to fight inflation anymore, right? They're not going to continue raising rates, perhaps even cut rates this year,
Yeah, they're talking
right?
about as early this summer throwing in the towel.
Yeah. So they're kind of admitting that, yeah, we still have inflation, but we're not going to fight it. So the notion as though everything is fine because the Fed is going to fight inflation, well, you can't rely on that anymore. And that means you have to go get your gold, right? There are no more excuses. So now we're going to see some weakness in the dollar, probably. And as a result, gold is breaking out in dollar terms as well.
Yes.
So the price of gold and silver can rise, but uh, as you're seeing right now you're seeing it rise by 10%, 20%, 30%, perhaps 50%, it's going to rise. But if we ever transition from regular inflation into hyperinflation, God forbid,
Oh boy. Uh-huh.
hyperinflation is, of course, the moment in which the public rejects the currency. The public is fed up with, let's say, the dollar and says, I'm not willing to see my savings being eroded any longer. And now I'm going to take whatever dollars I have and convert them into something. It's some kind of tangible good. And then you could see the collapse of the dollar. And if you see an absolute collapse of the dollar, then you could suddenly see the price of gold jumping by, by leaps and bounds. You can see it, one day traded for $3,000 an ounce, and a week later for $4,000 an ounce, and a month later for $5,000 an ounce, and 10,000, and
Sure.
there is no. So of course this happens only during a hyperinflation when the currency is really collapsing. So we need to be aware. We need to ask ourselves, are we in a hyperinflation? Yes or no? Right now, we're not. Right now, there is no guarantee that we're ever going to see a hyperinflation of the dollar. It's just a theory. But if we get into this kind of situation, God forbid, then just because gold, for instance, goes to $10,000 an ounce, it doesn't mean you need to go out and sell it quickly because the price is too high. You need to be aware of what is happening in the entire commodity complex. You need to be aware of what is happening in the entire economy. But because perhaps if it reaches $10,000 an ounce, maybe you need to keep it. Perhaps a month later or a year later, it's going to be $100,000 an ounce. So
Right. And
you
then
need
you
to be
would
very
really be,
careful.
yeah, then you'd
And
really
even
be
if
sad that
you,
you sold it.
yeah, even if you sell, if you decide to sell, don't sell it all at once. Do it very gradually.
I think
And
that's very good advice. Don't go sell your whole basket of eggs in one shot.
yeah,
You could really shoot yourself in the foot in a situation like that.
yes. And that's the privilege we have with gold and silver, that we can sell them gradually because they are divided into coins or bars. Unlike real estate, for instance, in which you need to sell a house or a condo, it's a large chunk of money at the same time.
Right. And it's all exposed at that point where, assuming you did sell something like that. So yeah, that's a good point. It's a huge advantage to having something like this that you can, just sell little by little as you need it. And, it'll keep protecting you against that inflation. So you had shown me a really interesting chart about copper. I'm going to go
Yeah.
ahead and put this on the screen. Uh,
Okay.
so contango is when the futures price of a commodity is higher than the spot price. Is that correct?
First, we need to say, please don't panic when you see
Yeah,
this kind of
yes.
chart. When you see this kind of chart when we're talking about things like contango, backwardation, it sounds very complicated, but believe me, it's not that complicated, and don't panic. It's simply, look, normally the price of a commodity in the future is higher than the price of the commodity in the present, right?
Mhm.
Because you need to store it, of course. If you want it in the future, you'll need to store it somewhere. And so you need to pay some money for the storage expense. And you would normally expect this kind of situation. We call it a contango. It means that the future price is higher than the present price. That's normal. But what we've seen in copper recently is that the spread was becoming larger than usual.
Oh, okay.
And that's the interesting thing. And that's a very long-term chart, and you can see that The price hasn't, the spread hasn't been this large for a long while. And you're asking yourself, why is it happening? And frankly, I'm not sure myself. I just have my own speculation. I think it is demonstrating a glut of copper. And you would ask yourself, why is there a glut of copper? And the answer is, since copper is used in the manufacturing, in pipes, in all sorts of industries. So if you have a slowdown of the economy, of the global economy, and you have a slowdown in manufacturing, then you could expect to see a glut of copper suddenly. And
Gotcha, because it's used in so many different areas. This can
yes,
really be an indicator for the broader economy, is what it sounds like.
yes, and as a matter of fact, economists they call copper Dr. Copper because they say
Okay.
that it has a PhD in economics.
Okay, interesting. So
Yes,
this
because somehow copper, due to the fact that it's being so widely used in industry, it can somehow indicate trends in the economy.
interesting. Okay, so this is a bad sign to see it
This
moving
could
like
be.
this. It could be.
I
It
need to
could
be
be.
careful. I'm not sure about the meaning of this signal. It could be an indicator of a slowdown in the global economy. Now, why is it important to us, silver investors, particularly silver investors? Because as we said earlier, a lot of the silver which is coming online comes as a byproduct of the mining of copper, lead, and zinc, like
Right.
55%. Right.
I see.
So,
Okay.
so if there's a glut of copper, what would you expect to see? You would expect to see copper mines slowing down their production.
Sure.
There's not so much of a demand for copper. But of course, if they're not mining copper, then there's
No silver.
less
Yeah, no
silver
silver
coming
byproduct.
online also. And of course, they're not going to keep the mines running. Like, let's assume that silver is like, it makes up like 2 or 3% of the income of your mine. You have a large copper mine, and the silver that you're producing as a byproduct, it's like something like 2 or 3% of your income. So you're not going to operate the entire mine just to extract that silver, right?
No way. That's a drop in the bucket.
Right. So any slowdown in the demand for base metals such as copper, lead, and zinc will probably also result in less silver coming to the market. And this is one of the reasons I've been talking about that for years. In my articles in Hebrew back in the day, before I moved to English, I was warning that in the next recession, next big recession, if we get a slowdown because the silver market is already tight, this could trigger a short squeeze. Merely the fact that there's less silver coming online from base metals.
That's really insightful. There is a lot of correlation nowadays. 72% of the silver is coming from as a byproduct, that's hitting the market. So actually that's really big. So yeah, thank you very much for sharing that.
Yeah,
That's
as a matter of fact, I'm going to tell you one more thing. As a matter of fact, there was a theory, I can't substantiate it, but that whenever there was a shortage of silver, when the shortage of silver was becoming dire, that the price of copper would be manipulated up in order to encourage the production of copper, in order to encourage more silver coming online as a byproduct.
I
There was
see.
a theory of a sort, running around. I don't know if it's true or not.
Sure, it's definitely something interesting to consider because there's a lot of moving parts in this market right now.
Definitely. And trying to maintain everything in order is very difficult.
No, absolutely. And then when you throw in all the stuff with the manipulation too, I mean, it's just crazy. And there's so much going on right now, and specific to the dollar with the de-dollarizing. I say it's I think we're in for a wild ride, folks. But it
Definitely.
is nice to see silver poked over 27 and gold over
Yes.
2300. And
As we were saying earlier, it's both exciting and frightening
yes,
because we as investors in this market, of course, we want to see the price of gold and silver rising because we believe their price is too low and has been too low for decades. But at the same time, this could be the harbinger of some serious trouble. And if, God forbid, this translates into war, I mean global war,
yeah, hopefully not.
War 3, then I'm afraid it's not going to be a very pleasant environment. So look, uh, I'm I'm very happy to have physical gold and silver in such an environment to help protect myself, but it's probably not going to happen in a very pleasant environment.
Yeah, if it ever gets really, really high, things are going really bad out there. But
Yeah,
yeah, so hopefully nothing like that happens. I'm really hoping for peace and that we don't see any large scale war breakout. Um, but yeah, it's a crazy time that we're in right now, and so you just never know what might happen.
yes. I want to add one more thing to this
You bet.
discussion about the possibility of war. I was arguing for some time, and I intend to even make a video about it, that perhaps silver can do even more than just protect us from war. Perhaps it can even prevent war or stop it, and perhaps even pacify the world. Because, eventually the fact that gold and silver have been so, the price has been so low, it helped the fiat monetary system as a whole continue to this very day.
Oh
This
yeah.
is what I this is what I believe.
Uh-huh.
And I think that the so-called war machine, what you call in the US the military industrial complex, it could only exist in the environment of a fiat currency. And perhaps if we do get sound money again, if gold and silver become money again, then perhaps there won't be enough funding for war. Perhaps governments around the world will have no choice but um, to become more peaceful because they're not going to have enough budgets, enough resources in order to fund these wars, which I don't think the common person is interested in at all.
I don't
I
think
know
so either.
it kind of sounds far-fetched, but perhaps gold and silver bring with them a message of peace as well.
Well, I think it could definitely help, if you can't just print off a bunch of monopoly money and go buy tanks or whatever, you got to get sound money to back that before you print it and everything's being budgeted. So you actually have to operate within a limited budget every year.
Correct. You
I
have to
mean,
you have to balance the budget. When you
right.
have sound money, you have to balance the budget. And since you have to balance the budget, it means that if you want to go to war, it means you have to cut something else. For instance, you have to cut entitlements. And then you have an outcry from your population saying, no, I don't want my entitlements to be cut. No, no. So let's not go to war.
That's a
So
good example.
it inadvertently it could bring us to a situation in which there's political pressure on our leaders not to go to war because we need these precious resources at home.
Yeah, and all these other useful things we could be doing with them too. Because like you said, the average person doesn't want more. I mean, I don't want more. People I talk to, nobody wants a world war. It's just all our leaders. And so yeah, I think that that's a very powerful message. Well, hey,
Yes, a message of hope.
I absolutely. Um, And like you had mentioned, the we're so used to seeing silver at such a low price. I mean, to us, it doesn't make sense that like it was 20 to 1 at one point, and that price wouldn't make sense to us, if we saw that now. It would be nothing like what we were used to. But hopefully it doesn't get really out of control. And I do hope for peace and for economic stability and, for things not to get crazy.
Look, I try to think about gold and silver in a rational way. I try to think about the economy as a whole in a rational way. I try to treat it, to use scientific principles in order to analyze it. But at the same time, I don't want what has happened in the past to affect my analysis. So if we're used to seeing silver trading around $25 an ounce, I refuse to look at it as something, that we have to be around that number from now on. I think that's a failure of the imagination. And just as we've seen, for instance, the stock market rising tremendously, as we've seen cryptocurrencies rise tremendously, and it wasn't the end of the world, right? We're still here.
Right.
I want people to consider the possibility, just the possibility, that silver is going to do what Bitcoin has done before. Because I don't see anything preventing it from happening, right? So we need to entertain conflicting ideas in our mind. And always we have to maintain the scenario that things are going to remain more or less the same as they have been. And perhaps silver is going to rise to, I don't know, 30, then 50, perhaps 100, as people say, by the end of the decade. These are very conservative estimates in my view. But at the same time, we also need to be prepared for gold and silver doing the incredible and reaching prices that we've never imagined. It's just something that we need to keep in mind and we need to prepare for also.
Right, absolutely. It is, you were talking about earlier, it would make a lot of sense with the miners. And another thing that I had wondered too is if it might be because of the price discrepancy. I see the post on Twitter that it's more expensive in China. Um, and so I'm wondering too
Yes,
if maybe that's another factor, another reason why, if they're intentionally not tamping the price down, if that has
yes,
something to do with it too.
yes, yes. That's another theory which is out there. And look, I'm not an expert on China, and so I really can't say. But I've been told that the price at the Shanghai Gold Exchange, which is based on physical trading rather than futures contracts, is indeed higher than it is at the COMEX. And this means that there's an arbitrage. There is the possibility of traders to buy gold and silver in the West and sell it at the Shanghai Gold Exchange and pocket the difference.
Right.
And an arbitrage is something which tends to close itself, right? Because it creates pressure on the price in the West to rise and the price in the East to drop until they meet in the center. And as long as this arbitrage exists, then you need to ask yourself what is keeping it.
Yeah, how is
Uh,
it staying that way?
how
Yeah.
is it staying this way? So that's another, you know,
Right.
indicator of some kind of a manipulation. And okay, so some people are speculating that the Chinese authorities are allowing the price or pushing the price, I don't know, in Shanghai, allowing it to rise, or perhaps it has nothing to do with the Chinese government. Perhaps it simply comes due to the fact that the Chinese people really want gold and silver, and there's a huge demand, and metal is flowing towards the east. Perhaps the explanation is much simpler. And anyway, if that is truly the case, and the people in charge of the comics are forced by the fact that there's an arbitrage, they are forced to allow the price to rise, then perhaps it is China, and perhaps it is the Chinese people who will do the job for us and end this manipulation. Yes.
Yeah, maybe so. And maybe it's a combination of the two, but
Yeah.
yeah,
Yeah.
it's really
Of
interesting
course.
what's going on right now.
Yeah.
Well, I wanted to say thank you so much for joining me. It's an honor to have you here. Your insights are so valuable.
Thank you
Uh,
very much.
you bet, absolutely.
As
Um,
always, I enjoy talking to you, and I hope to see you and continue to follow this market together. Probably, I'm assuming as it rises, as it continues in a new bull market, it's going to be exciting times, and um, hopefully also safe times for everyone. So thank you, and thank you to your viewers.
okay, you bet. Well, hey, yeah, it was good talking with you. I look forward to speaking with you in the future, and I hope that you have a great rest of your day.
Thank you.
Thanks, Oren. Have a good one.